My name is Tid Harvald. I lead the government relations and public policy work for the Better Than Cash Alliance. We are a UN-based partnership of governments, companies, international organizations that are all focused on the shift from cash to digital payments as a vehicle for development and inclusive growth. I traveled here from New York and have enjoyed the last 2 days of discussions. We had incredible exchange of opinions on India's role in the world, about the emergence of India as an economic giant, the role in the G20, the new security challenges. And it seems only natural to focus part of our third day on an area where India has really emerged in the last, even just in the space of a few years, as an unprecedented global leader, and that's digital and cashless payments. And if you look at the results, they are just staggering, thanks to the investment of the Indian government in infrastructure, in steering the right policies, in the regulations, etc. And if you look just for an external audience to think about the 99% of the Indian population, 1.3 billion people who now have a digital biometric ID. If you think about the 1 billion cell phones, mobile phone subscribers. If you think about the over 300 million Jandan accounts, I mean, it just blows your mind. I remember I was part of a G20 meeting right when India started the Jandan campaign. A month through, it was September 2014, and the representative of India reported to the G20 that they've just opened 20 million accounts in a month. And I remember the Australian representative turning to the Indian representative said, "Do you want to tell me you just banked the entire population of Australia in 4 weeks?" And everyone just started naturally applauding. And we see how this is creating even more results. There are hundreds of millions or dozens of millions of Indians who now have access to insurance for the first time in their lives. We've seen the success with the transferring of social welfare payments, pensions, and others, whether it's the gas subsidies and others, through the new accounts, which has resulted in over $9 billion cost savings in just the space of a few years. And so we are delighted to have a panel which is composed of many of the leaders who made that happen in the space of just a few years. And we're going to focus the next 45, 50 minutes to discuss what has made this emergence of this India model of digital financial inclusion and digital inclusion such a success in such a short period, and then think about what are the lessons that other countries could learn or could extract when looking into building the future economies that will be both inclusive and, of course, digital. So I would like to turn to you, Amitabh Kant, who for our Indian audience needs, of course, no introduction, but for the fact we have 80 people from 85 countries in this conference, I should mention that Amitabh Kant is the CEO of Niti Aayog, the National Transformation Institution, the think tank of the Indian government, spearheading policies around development in India. And I would like to ask you the question. India has put digital financial inclusion as a top agenda item as part of its national development. And my question is very simple. Why?
So we are the only country in the world with a billion bank account. We're the only country with a billion biometric. We're the only country with a billion mobile. We have about close to 400 smartphones, with the cost of smartphone is falling at very rapid pace in India. In fact, you can get a smartphone now and pay for it 3 years later. So my view is that in 3 to 4 years' time, you'll have a billion smartphones as well in India. But the important thing is that the basic infrastructure which India has created is public in character. The biometric Aadhaar is a public infrastructure. unlike Alipay in China or Google or Facebook in the United States of America. And it allows a number of private sectors to further innovate on the public infrastructure. And what has happened is that, in recent times, the spread and the impact has been so enormous that it has not only ensured that government schemes are able to get on with great levels of efficiency, but India was notorious for leakages in its government schemes. So when I was implementing many of these government schemes, the leakages were as high as about 45% in a government scheme. But now every single government scheme gets through the direct benefit transfer straight into the bank account of the beneficiary. So it's made it a far more efficient direct transfer into the bank accounts. Secondly, about a decade back when I was working in the fisheries sector and was trying to enhance the earnings of traditional fishermen in Kerala state, it used to take me 8 or 9 months to get a bank account open for a traditional fisherwoman or a fisherman. 8 to 9 months, know your customer and all that was one of the most tedious process. Last week I walked into a celebration of the Federal Bank and I opened with just my thumb impression, I opened my bank account in 55 seconds flat. So from 10 months to 55 seconds flat is the paradigm shift. But I think more important is the fact that it is enabling customer acquisition at very rapid pace. So one of the new incumbents, which has acquired about close to 170 million customers in a span of about 4 months, the cost of acquisition has been just $1 as compared to $25 to $30 in the Western hemisphere. So what technology has enabled, what biometrics has enabled you to do is to skip several layers of processes and procedures and leapfrog technologically. And I think this is the biggest disruption ever caused anywhere in the world. And many of us do all our peer-to-peer or peer-to-merchant transaction using our mobiles, but the spread of broadband connectivity is so enormous and the spread of smartphone is so enormous that the latest figures show that at 1.3 GB transactions, India's mobile data consumption is more than the mobile data consumption of USA and China put together, both put together. So what we are seeing is one of the biggest technological leapfrogging to bring in digital transparency. It is bringing in great levels of efficiency in performance, and it is leading to acquisition of customers at a speed which has never before been seen in the history at the lowest possible cost of acquisition of customers. Thank you.
Thank you. And this point on leapfrogging is a good segment to turn to you, Vijay, because leapfrogging is exactly what you want to do. So Vijay, for those who don't know, is the head and founder of Paytm, which is the fastest growing mobile wallet in the world right now, if I'm not mistaken, with already billions of transactions.
And the fastest growing bank.
Now we're a bank.
Exactly. So.
I think only the banks. Earlier, the wallet could be issued by non-banks. So banks and non-banks could issue wallet, but now we are a bank issuing the same wallet. So as a customer, there is no difference, but as a system, there is.
So my question to you is, similar to the question to Mr. Kant, is why? Why did you decide to make this bet on digital payments and e-commerce and now banking when you decided to, as an entrepreneur, to try and leapfrog into the Indian market?
Yep. My Eureka movement can be given a note to Steve Jobs. I was using iPhone and I had a US credit card in that app store, and I was trying to buy these content and applications and games, and it was so seamless. I was so enamored by the simplicity of it that I said that Indians, if we ever have to bring the same experience of App Store simplicity to India, India cannot do it because India's rest of the bank payment systems are not that capable, are not that mobile savvy, are not that converted to the mobile age. So we built a, we took a vow to solve the payment as a problem, no more pending to be solved as a method at least. A scale definitely we will have to solve. And then the Paytm wallet got up. The opportunity has been that in India, unlike in Western world, desktop computer has been big, POS machine, card machines have been primarily distributed well. So in India, even though we started as an app-based payment system for apps and online services, I think the opportunity in offline world is many times bigger than online world. And many government initiatives, including incentivizing shops to take payments in digital format, reimbursing the charges that a card network or a payment network would levy on the merchant, or even incentives that have been there for converting yourself into GST, white money, and so on and so forth. Everything is sort of like tailwind towards converting into a payment system. Now, the opportunity truly in India, like we just heard Mr. Kant talking about, is not that you just become a payment system. It is about building a financial services company out of India, which is a world benchmark. I truly believe the new banking models in the world will come out of this country. I'm very proud and happy to say that you called it a India model. We as Paytm will be one of those early examples of that India model where your cost of customer acquisition, your business model revenue line items, and your servicing cost, and your distribution cost, and then the kind of financial services that you build based on data and technologies will be so unique and different that are not there or are exorbitantly priced in any other market out there in the world. I'm very happy to share the fact that in the first year of operations of our bank itself, I mean, it's an audacious number, but our number in the first year itself will end up making us the largest bank owned by a private company in this country in the first year of operation itself. And that wouldn't have been possible if it was not for the public technology systems like Aadhaar, like UPI, like a full stack, India stack, which Arvind will talk about next to me, are there. I think India is the truest hotbed of world fintech innovation at this moment. If the center of fintech innovation was to be identified and you were to learn about it is a caveat, because the only thing the Chinese ecosystem doesn't let you do is that let you learn about it or understand about it. If you were to identify the world or center of fintech innovation, it is this, hami asto. It is that. So why is not the question, why not is a question for the world.
Great, thank you. And we're going to go back to that at our second round of questions. I want to turn to you, Arvind Gupta, who is the head of the Digital India Foundation, working also with the BJP party on IT. And you've been also very, very key in helping, working with the Prime Minister to articulate this vision for Digital India. And so I would like to ask you, given that we heard the incredible progress accomplished by the Indian government and by entrepreneurs, what is the next frontier? Where is India going? Where should India go to expand this digital financial inclusion or this digital inclusion ecosystem?
Thank you, Tudar. Vijay led, kind of prompted what I need to say. And Mr. Kant started off by talking about this, the model of eKYC that is enabled in India using a digital identity system. But the big thing I think we need to take away, and what I would like to explain, are two different things. India always was a tech superpower. We had the highest number of people working in the technology arena anywhere in the world. 42% of the tech industry globally have Indian people in it, people of Indian origin in it. Now, why I say that is the PPP model that I'll explain to you. We always had the people. Next, what we lacked, and what Mr. Khan talked about, Alibaba or Google, these have become enormous platforms, as all of us realize. Now, India didn't have a platform its own. Today we have. And that platform is the Aadhaar-based platform. And to answer your question, Tidar, that's what India is doing. It's controlling its destiny. What is being called as public good, innovation as a public good. We've stacked up all these things together. And it's a public good. And this stack is called India Stack, Aadhaar-based stack. It works interoperably. From Aadhaar, which is your identity, it links to your DigiLocker, where all your KYC documents are kept. That's why what Mr. Kant explained about doing a bank account in 55 seconds. By the way, I've won all contests globally in opening the fastest bank account. Nobody can beat India in opening a bank account today. And this is from, sir, how many years ago? It was 10 months waiting? About 10 years ago, 5 years ago. Today and what Tidar didn't mention, that India did the biggest financial inclusion of all times using this technology. 220 million bank accounts in less than 1 year. That's faster adoption than Facebook, by the way. So the technology is working at a very low cost, at a very high scale. So identity layer, the paperless layer. So identity layer is a presenceless layer. I can do things without being present somewhere. Then second layer is a paperless layer, which is like if you use Dropbox or any digital storage of documents on steroids. It's powered by your biometric identity. That's your identity. 1.2 billion people on it today. And the third layer is what actually a lot of us talk about, is a payments layer. But that also is enabled by these two other ecosystems. And when you stack all of them together with a consent architecture on data empowerment and protection, that is your India stack. And today it's a public good. Why it is a public good? Because people like Paytm can use what Vijay didn't do. I'm a Paytm user, disclaimer. Almost everybody in India is right now. But somebody came to my house to do my verification, the KYC, which was required by law, I guess. Within 28 to 30 seconds, he finished my KYC. Took my Aadhaar number, I verified myself biometrically, done, gone. 30 seconds. And what Mr. Kant said, if you put it in relevance, the cost of doing this KYC has come down from $25 to less than $1. And that is what is transformative. That's why you can have these zero balance bank accounts. Why do you think financial inclusion was not happening? Because the cost of banking was very high. The cost of customer acquisition is the start of that, but then managing those customers, retaining those customers, monetizing those customers was too high. So with this stack, which is an open good, public good, not only the government is using it for direct benefits transfer, but private companies like Paytm or any innovator today can use it. Any startup, any big business, small business. Almost all telcos in India have moved to this system now. Almost all, and in fact, there's a new telecom company that started in 2016 that only started off with this. So there is a lot of innovation that is being done around this. So that's the second P, by the way, that's the platform. The third P India has done is policies. What Mr. Kant and his team at Niti Aayog and everybody else has done, the TRAI, the IT ministry, the PMO, all including, this is where our policies have come totally synchronized. You see the stand India took on digital payments, incentivizing them, small things. The number of POS in India in 1 year have doubled from 1.4 million to 2.9 million. This is what the payments bank, the new revolution, what Paytm is a payments bank today. Am I right in saying that? Payments bank. I mean, we added 12 plus 9, 21 new banks in India, new licenses. So policies was the third thing that have been added, which is abetting this digital economy, digital payments, bankless banking. The last thing I would leave you is, one is the India stack. So people, platforms, and policies all have worked in tandem. But the biggest lesson that everybody outside India should learn from India is how you use innovation as a public good to solve the problems, not only of payments and banking, but of government transfers, of cost of doing business, of financial inclusion, health, education, a lot of that. And that's the future. And having a public good at a cost that nobody can imagine. What India's Aadhaar and this digital identity system costed us to build was $2.4 billion. 1.2 billion people. That's the average cost of $2 per person. I think we've got an ROI 6 times over by government savings itself. And let alone the cost of banking, innovation, and everything else, nobody's accounted for that yet. So that's the biggest lesson according to me. And of course, having a very great impetus on demonetization and a formal economy helps. So.
Thank you, Arvind. Porush from MasterCard Division, President of South Asia. I would like to ask you, for MasterCard, what does this mean? We've talked about what the government have done, what other entrepreneurs are doing. What does it mean for a company like MasterCard, which is part of this market? I also acknowledge that Ajay Banga, your CEO, who's also Indian, was just here in October and said, for me, my enemy is cash. My competitor is cash. And he said that digital financial inclusion is also a global priority for a company like MasterCard. What does this mean for your innovations in the Indian market?
So right, you said, Ajay talked about the fact that cash is a competitor because globally, only 15% of transactions are electronic. But in a market like India, for a long time, right leading up to the last 2 years, 95% plus of the transactions were in cash from debit cards. That's all they were used for. And if you look at the innovation, the stack which Arvind was speaking about, with Aadhaar, the speed with which you can onboard merchants or which you can onboard consumers. We in 2018 are the only international network will do upwards of 700 million authentications. You can use this to onboard a merchant in 30 minutes. That's the speed. If you look at it in terms of things like the fast ACH platform and unified payment interface, they're already up to 1/4 of the cash volumes already happening out there with peer-to-peer. And you get innovation from both infrastructure and access to infrastructure. So Bharat QR, which was launched last year, is globally the first interoperable QR that we developed with the other networks, domestic and international, which is being exported to the rest of the world. Because that's what needs in a developing market, right? Low cost of acceptance. And if you look at what's the impact, in 2 years, debit volumes, which used to be at 95% on cash withdrawals, have moved to 85%. If you look at acceptance, it took 40 years to get the first 1.5 million acceptance locations. It took 14 months to get the next 1.5. That's just some of the examples of what's happening out here. I think, but having said that, as we innovate using new technologies, artificial intelligence, blockchain, it's going to be really critical to start seeing how do you secure every single transaction. And I think that's a place where Arvind talked about what we are doing on platforms and policies. I think that's where the government is driving in terms of public-private partnerships. Mm-hmm. So as an example, working with Mr. Kant's Niti Aayog and with the ORF, we are actually working in terms of securing the ecosystem on protecting the ecosystem, protecting the data, protecting merchants and consumers, and protecting banks. And that is what's going to drive it to the next level.
Terrific. And that's also a wonderful transition to you, Agnieszka, from the Ministry of Digital Affairs of Poland. Poland is also working on expanding access to financial services, but also working with other countries that are members of the EU. EU is a body of 28 member states and has worked in the past few years to consolidate this digital single market, also with a focus on harmonizing practices around digital payments, and is considered a model on secure digital payments, but also a very, very robust consumer protection framework. And so EU, 500 million people, 28 member states, India, a little bit more than half of it, also with roughly the same number of states and territories. What are the lessons and what are the practices the EU has developed that you think are relevant for this discussion, particularly as Porush mentioned, which is the next frontier is making sure that clients are secured?
Good afternoon, everybody. I want to start that I represent cybersecurity area, and I'm working for cybersecurity department in my country. That's why I was so happy to be able to take part in a panel that is talking about the financial sector. which is very crucial also for the Europeans, for Poland. We put, and this is why I thank Mr. Singh that he mentioned security. For the Europeans and for what we are doing now, the very important issue is security. That's why whatever we are doing and however we are developing in a digital thinking, we are always trying to balance innovation and security. Of course, in some minds it can occur, okay, the security can limit the innovation, but on the other side, insecure innovation is also not a development at the end. So that is why I want to put your attention to one of the initiatives which was passed in the European Union in every 28 countries and which will be implemented next year. It's important also for India and people from Asia who want to do business in European Union. This is directive on a security of network and information systems. And why it is important for India and for this region? Because this directive will also regulate the financial sector and the banking sector, and we will be much more concentrated on a security in the networks, which means for the companies that want to do business in Europe, they will have to provide a very high level of security of any transactions, of any actions in financial sector, what they want to do in Europe, which at the end means, for example, building an institution that provides such a security. And such institutions, in our understanding, are internationally recognized SOCs, so Security Operations Center, or also the much developed computer security incident response teams. So this is why I want to put a very high attention of yours, especially if you are thinking about going to Europe and thinking about making business with Europeans. If you, as everybody from this panel mentioned, you are very digitalized, and this is what we also think about and what we do. There is, for example, a program in Poland, digitalizing Poland from paper Poland to paperless Poland, which was also mentioned by the panelists. But whatever we are doing, we always, and will be stressing this with our partners from outside, we'll be stressing very much a high level of security of any transactions or of any action in this regard. So that's why I would be very interested, especially having such a distinguished panelist, to get much more knowledge of how the India and this digital flow that is happening here is going to be secure. That the receiver, the customers, will be having enough security, doing all those things that are doing digitally, and how India will approach later on Europe to meet the same level what actually will be required by the Europeans on the other side. Thank you.
Thank you so much, Agnieszka. So we've heard from our wonderful panelists about how this incredible model, the digital financial inclusion model of India, the India model, which we should start calling the India model, has emerged so quickly. And we, as Better Than Cash, as a UN partnership that facilitates exchanges between governments, we've already had 12 governments coming here, thanks to the hospitality and generosity of the Indian government, whether it was countries like G20 countries like Mexico or Indonesia or other digital leaders like Kenya. And all of them, when we opened that opportunity to come to India, all of them raised their hand and said, we want to come and learn, whether it's from the India stack or whether it's from PMJDY, et cetera, et cetera. And for me, if I look at it, it's a clear area where India, you mentioned Arvind, could really add. It's already a soft powerhouse, whether it's thinking about technology or whether it's thinking about Bollywood or whether it's thinking about yoga that everyone practices, whether it's Justin Trudeau or Beyonce. But digital payments is really an area where India can become a superpower soft power, superpower, because this is where governments are looking to learn from India, adopt some of the models here. And also, as most of you mentioned, there are still areas where India also needs to figure things out, whether it's the gender gap, etc. And so by moving forward and bridging that gender gap, etc., these are all lessons that so many other countries will be very keen to learn from India. So if I could ask, particularly our Indian panelists, what would be your advice, whether for your peer government officials or for entrepreneurs, what would be your advice when those countries want to embark on transforming their economies to make them digital and inclusive? Where should they start, and what should be their priority? I'm going to start with you, please, Mr. Kant.
Firstly, the platform must be publicly owned. That's critical. And secondly, allow a lot of private sector to do a huge amount of innovation on top of that. Look at a young entrepreneur like Vijay. He's going to have 500 million bank accounts by 2020. So phenomenal growth because you've been able to create a public platform. Number two, I think must be clearly realized that the days of physical banks are dead. They're dead and gone. In India, 3 years down the line, there will be, if there are physical banks, they'll be irrelevant. Everybody will be doing digital transaction through digital means. Mm-hmm. And thirdly, what it would prove is that India will throw up a huge amount of data. As it is, when I said our mobile data consumption is more than US and China put together. So data will be so enormous, and therefore the biggest revolution to my mind will come in from young financial technology companies. And we have about close to 1,000 fintech startups in India. They will be disrupting the world of financial technology, but they'll be disrupting the world of data analytics. So data analytics would lead to financial inclusion for everyone, and that would really mean a larger flow of resources of the banking system digitally to people below poverty line. This would also lead to flow of resources to MSMEs and SMEs who have traditionally and historically had a better record of repayments than the large Indian conglomerates. And therefore, we would see a huge amount of disruption. If I use my mobile and if I use my own biometric, if I'm using a credit card on a transaction, I'm paying 3.5%. If I'm using a debit card, I'm paying 1.5%. If I'm using my own biometric and I'm using my own mobile, I'm paying virtually 0%. 0%. So the next biggest disruption India will actually do will be to wipe out credit cards, debit cards, ATM machines. We'll be all transacting at zero cost using my mobile and my own biometric. That will be the biggest disruption. No physical banks, no credit cards, no debit cards, no ATM machines. All transactions will be through mobile using biometrics. Lead huge data analytics, financial tech companies, young fintech entrepreneurs like Vijay Sharma will penetrate global markets. And that is the future.
Wow. The future is bright, future is India model. So I totally agree. And I want to tell you as a takeaway, the idea is to give a takeaway. If you're thinking for your country or for your business, next big thing, and it is not mobile first and mobile only, you are actually not thinking it correctly. You have to reset your vision and point of view to start from mobile and end towards mobile itself. Just like we just heard Mr. Kant talking about that payments which are card or postless, that is the reason that the growth happened. I'm giving you context here. Month of November 2017, we identified number of transactions from central bank. RBI shares the number of transactions, the data. Paytm accounted for 2 times number of transactions all bank credit cards put together strengths. And it was a little less percentage than total number of debit card transactions that happened in this country. Now that is happening possible because we are saying you don't need any extra hardware or any extra toolkit with yourself, but your mobile and a QR code. So my single takeaway of the last 5 years and last 5 years bet has been, take a bet on the mobile, take a bet on smartphone, it is going to be there. And take a bet on smartphones and data. Don't take a bet on feature phone. That's a puck has moved away from there. It doesn't mean that there won't be credit or credit card based systems. They will become digital in nature. They will become that when you are scanning a QR code, you would have a credit opportunity. You would have an opportunity to disperse credit in an unprecedented way, and you would have an opportunity to disperse many other financial services. For example, when you scan a Paytm QR code in a shop to pay, that's the method that we talk here as a Paytm model, you have a choice to keep the payment due next month. So it's like a pay it later. It's like a Paytm postpaid product, which is a credit product effectively. So democratization of financial services, whether you talk about lending, wealth, or insurance, is possible only when your model is fully digital, whatsoever it is, originated and terminated completely in digital cycle. I think that is where the trick is. And second is, consumers are looking to do more and more things by themselves. Look at yourself. One point in time, we used to get our flight tickets from some travel agent. The ticket used to be coming in an envelope. Now it comes in an email done by an assistant in the office itself. Then the email we used to take as a printout to the desktop check-in counter, and now we don't take it to the check-in counter. So we first eliminated the person who was a travel agent as a need of printing tickets. Then we eliminated check-in counter. Now we are saying that we choose the seat also and enter the detail of passport, and we just show the QR code at a security counter and get in the aircraft. What is happening in this meta is consumers want to do more and more things by themselves. The world is moving DIY. The world is moving thinner, smarter devices. That's the world that you're going towards. All your solutions have to give power to the common citizen. All your solutions have to give power to common merchant. All your solutions and businesses opportunities are in the young startups. So public good platforms is the base platform for it. So 2 takeaways, all the mobile and do it yourself.
Yeah,
Terrific. Thank you. Arvind, please.
I think Mr. Kant and Vijay summarized a few things, but mobile first, India has done that. That's a great lesson. We add net 110, 120 net new smartphones every year. That's an aspirational number, as well as shows the progress. From 155th in data consumption, India is now top 3 in the world. That's a hard number. So that's how fast mobile consumption data has moved and mobile smartphone penetration has moved. Number one. Number two, platforms, Mr. Kant already talked about. Along with that, the platforms, I think the biggest 2 components of the platforms that are lessons for any other country is, number one is, even if you need to redo your identity systems, do an identity system reboot. Come to digital. Many countries started off and they have a legacy. I think if India can do it, any country can do it. Yeah. 1.2 billion people, that's the continent of Africa. So, and it shows the investment has a return. So digital identity is number one. Number two, have a non-rent seeking payment system. Now that's a very loaded statement. What MDRs, Mr. Kant talked about, merchant discount rates, India has disrupted that completely. From the ATM machine to the POS machines to a completely light infrastructure. If you are in a policy side, you have to really look at it. If the rent seeking becomes zero on the digital infrastructure, the monetization of that can happen in many other ways. India has led it, but you've seen China, some smaller countries in Africa do it. And the rent seeking only serves a little bit short-term purpose, but the long-term goal of giving credit, democratizing credit, banking, financial inclusion in general, gets served. And that's where the real, the business lies. So that's the second big advice. And third big is, I think, what we have seen is the policy framework has to be very, very agile. It's very important to have that policy framework. Regulation and policy generally lags technology. But in this case, it can be the enabling environment, and that there has to be a good balance between regulation and innovation. And India has benefited from that. Indian entrepreneurs have benefited from that. So those are the lessons at a very high level from India. I do want to add one number to that, and this is a number that combines a lot of things that we are talking about. November 2016 or October 2016, just before demonetization happened in India, India's homegrown payment network, which is called UPI, completely interoperable, works on a smartphone as well as a non-smartphone, by the way, because India still has 600 million people who don't have a smartphone. Until that time, we want to make it very inclusive. So it works on a non-smartphone, $8 phone, and that's very important. Clocked in October 2016, clocked 100,000 transactions. In November 2017, 106 million transactions. Just absorb the growth from 100,000 to 106 million. That's the growth we have seen. So, and so shows that, you know, if you have the right policies, the right environment, right incentives, these things work, and people do move. So the consumer behavior is moving towards that. Citizens want that ability to do that. Thank you.
Thank you. Porsche, please.
So I think 2 points very valid, right? I mean, mobile devices are going to be key. And that's why we actually have, for the whole world, mobile development or mobile application development happening in India from MasterCard. The other one which Mr. Kant talked about was data. And data is also going to be very key. And we're going to data analytics for the whole world from here. I think the form factors will change. Pay before, pay now, and pay later as concepts will always remain. That's never going to change. I think what will change is the form factor of how you deliver it, which in India is more and more going to be through a mobile device. And at the same time, you're going to have different ways of economics as volumes grow. Because without an economic, you can't create any kind of infrastructure. There has to be some economic model, which we've seen, for example, as things like the merchant discount rates for debit cards have come down to as low as 0.25 for fuel, and you see a well over 1,000% growth. And that's the kind of thing which you start making daily acceptance, daily usage of customers. But I think the biggest impact that we have been seeing as a network is the impact of combining all these things together in terms of what it does for smart cities, urban mobility, and transit at a faster pace than what you would normally see.
Thank you. Agnesha, do you want to comment on this quickly?
Yes, I do want to comment because I very much like what Vijay said, that we should do like two things that we should remember, are mobile and do it yourself. So that's why it is so important, what I mentioned before, and to put a special attention on the education of the consumers, that they know how to consciously and how to secure use all those digital instruments you're providing. And I would be interested, because we do in Poland create an initiative, public-private partnership with the private sector, with banking and financial sector, in order to support the clients, the consumers, not only to educate them, but also to provide them secure tools, instruments. And this is also happening at the European level. Does such any initiative exist? And do you have any cybersecurity policy in place?
Yep. So in India, demonetization was the days when you had to bring significant large digital first natives to do a complex transaction of financial services. It is very multi-step jump in a single step. And we had done a program called Each One Teach One. So college students understand faster than their parents understand. So we said, if you do this, I'm going to give you a certificate that you're a good guy. So gamification of those people who were teaching others and giving them campus icon and upgraded icons and virtual goods and then giving a physical certificate, that worked out incredibly well. We ended up building a thing called Paytm Force, and they become our asset today. So that's like hundreds of thousands. Actually, the number is 600,000 people in this country connect with us to ask something that they can take to the masses. So again, I think the power of do-it-yourself, power of crowdsourcing, power of network effect of letting people do it is underestimated, because all the time as a business or as a government, we sort of expect that us to solve the problem of people. India's demographic dividend is actually that point when young and committed young entrepreneurs or young people take this as a purpose and take it to the masses. So the training or cybersecurity now the question is, so we use them to train and send the videos and explanations what they should take care. And that works out. Otherwise, by the way, I mean, we talking about demonetization here, so I want to give you a little bit of context of those days. Imagine in those 2 months, all the digital transactions are at a many times over ever in peak movement. And many times first is happening as a consumer. The single most fiasco that you want to avoid that movement is any kind of hack whatsoever, even if people are calling gullible people and pretending to become a bank, right? So it is not a movement of where you have a normal day. It is a movement that will generate another layer of panic. Nothing happened. Nothing absolutely happened. It is the incredible power of India's youth and our governance that we could take care of such a large event where digital first time digital ended up doing financial transactions. So I think the works out is that you teach people and make your citizen part of your team is the idea.
Arvind, if you want to come
Just
quickly,
quick-
because I wanted to give the floor
Just
for
a
questions.
quick comment on that. I think in computer science, I'm a computer scientist by profession. There is an algorithm called divide and conquer.
I thought it was in politics only.
It's a fundamental algorithm of computer science, and in that, the algorithm is, I think, what you're talking about, Vijay, has been put to work not only by private but government also. I think government is. This is the great thing that government. We have one of the senior most officials of Government of India sitting here, and the private sector startups competing for who's doing more innovation. And the lesson here is that, what he's talking about 600K, the Government of India, the HRD ministry, which controls technical education, also started a program like this. 2 million students were enrolled to do 10 more people, to train 10 more people in cyber literacy and digital literacy, financial literacy. And they ended up doing 20 million households. They were told you have to touch one household, register that household on a website, and 20 million households were covered by 2 million students. Remember, India has about 200 million, 220 million households. So if you cover just 20 million with students, that's 10% of the population. So a lot of those strategies were deployed, and a lot of good effect is coming, and digital economy is showing uptake that like never before.
So we have, unfortunately, only 5 minutes for questions, and so we'll take a few of them from the floor. Please ask a question that ends with a question mark, and if you want, make sure you address the person you would like to see the question answered, and also present yourself. Please, sir.
Sorry, thank you. A question around investment. Where is the opportunity to invest in what sectors? I mean, to me, the idea that the stack and innovation as a public good can really help sort of bottom of the pyramid and has unlocked so much. We've done that now with payments, and Mr. Kant, it was quite amazing for you. You said there's 1,000 fintech startups, and that seems like a great place to invest. Are there other sectors that you see the customer acquisition based on the IT stack falling? Is there opportunities in healthcare, education? Where do you see, and it's to the panel, new startups coming and disruption based on this stack?
So, there's a young girl called Pranshu Bhandari, and she started Culture Alley to teach Mandarin and Japanese, and then she switched over to an app called Hello English. And last year, she's taught 9 million Indians how to speak English. 9 million Indians. Not a single school anywhere in India has been able to do it using digital technology. You look at what young women entrepreneur like Meena Ganesh has been doing through Practo, and look at our health startups, Portia and Practo. Or forget that, look at a startup like Mitra Biotech, which relocated from Silicon. When we started the Startup India movement, actually all our startups used to relocate from here to Singapore or to Silicon Valley, but Mitra Biotech is a great example of one amongst the many startups which have relocated from Silicon Valley into India. And actually, Mitra Biotech is doing great work around personalized cancer care. You should look at what they're doing. Or Consio Medical. I was not aware that there are 100 million people in the world who suffer from issues of stool management and 16 million people in India. But Consio Medical did an inverter adapter which was accepted by Indian hospitals and is getting exported. And I mean, amazing amount of work has happened in the Indian startup movement. And, Mark Zuckerberg is investing his personal money into an education startup called Baiju. Or when the tsunami hit Chennai, the government was not able to reach out to stranded people with food packets. It was one of our startups called Social Cops, which assisted the government of Tamil Nadu to reach out. So there's a whole revolution happening around India in the world of startups. And many of them relate to issues which India is facing, challenges and problems which India is confronted with. So you'll see startups working on fluoride and arsenic-free water. You will see startups working on providing seed and fertilizer to farmers based on weather and soil conditions on a real-time basis. Silicon Valley has the highest number of innovators, but it has the least number of challenges. And there are no challenges there. India has all the challenges, and therefore all the innovators are increasingly coming from here. And if India is able to find solutions the challenges which its 1 billion people face, it'll actually be finding solution for the next 7 billion people of the world who will actually be moving from poverty to middle class in the next decade. And that is really solving the problems of the world and not doing isolated innovation sitting in Silicon Valley.
Terrific. I'm going to take the two next questions together because of time. Please, the lady at the back.
Hi, Stephanie from Intellicap. I've been working on the topic of digitization of value chains, digital value chains in recent years or recent months. And you have talked a lot about the incentives. The question when we are talking with the Unilevers and ITCs of the world that are digitizing the value chain is, where do the incentives come from and who is paying for those? And there seems to be not a serious effort of different actors in the value chain to pay for these incentives, because it goes from the margins. So who's paying for incentives?
Thank you. And the lady next to you, please. Yes.
Hello, my name is Shaima, and I'm from Egypt. I'm working for the Prime Minister office. I came from a country that if I'm using the ATM, they are just consider me as aliens. So you are doing a really good job here, as you are have kind of cooperation with public and private and grassroots levels. So you develop all the initiatives. My question to all the panelists: how can we develop in such country, in developing countries such as Egypt, how we can develop kind of initiative in larger scale, instead of like working in just grassroots or just only private sector working themselves or private or public as well. So how we can connect both, three of them, to have a larger scale initiative to move to the digital era. Thank you so much.
Thank you. Arvind, do you like to take the question?
Two very quick comments. I think what India Stack enables, to answer your question, is, in my opinion, 3 or 4 quick startup areas. The 600 billion global remittance market is waiting to be disrupted. It's, again, a lot of rent seeking there. So 10% of that comes to India, for example. So that's one area. The 2 is credit democratizing the credit to the last level. And 3rd is, of course, health. I think I answered the question on Egypt, that lady from Egypt asked on what you should do is you should quickly set up a task force to start your digital identity project. That's step number 1. I mean, that goes without saying. And start relooking at your payment systems and start treating data as the new oil.
What she's asking is, do you have a consultancy service source? You guys done darn good job. Our country wants it. Would you not come there?
The representatives of MEA are also here, so I'm sure they
Good job. Please come to our country.
We are willing to export Vijay Shekhar Sharma.
No, we need him here.
Vijay, are you willing to be exported?
I'm a total India opportunity dude. Well, I think another question was the opportunity in the value chain, and then who's going to cost it.
GST.
So the answer is that the cost of the value chain enhancements definitely go towards the end maximum. So there is always a maximum value seeker in that. What you're noticing here on the table is there are rent seekers on the table, and then somebody's taking a bet that there is no rent seeking happening, which is exactly what the value chain advantage over the period comes. For example, like this intimidating number of hops that goes, ultimately one side does get benefit. So the cost eventually belongs to that person. It's nearly like a marketplace operator will try to disconnect many people to get directly to the consumer. So then they are the one who will put the cost of it and then advantage of it.
Great. Amitabh, you wanted to add something to this? No. Okay. Please go ahead quickly.
Yeah.
I just want to reflect the Egyptian question. So I would say that trust is a very important factor in building any digital society and in developing digital instruments. So if you're thinking about having such a great model as in India is, you should think about developing trust between the partners, society, government, and the other institutions. So I would say this way.
I just want to add one thing on the Egypt piece, which is absolutely on the partnerships. And I think what you have already started doing between the government, players like Fori, and other players is going to strive some of that. I think the advantage which we have had is an acceleration we've been able to do through disruption on something as big as demonetization. I think you have to look at what is your disruptive moment to try and drive that.
Great. Well, I'm delighted to see we started this panel by saying that India has so much to teach the world, and to see that this panel is already beginning of this international cooperation around building an inclusive digital payments ecosystem and economies that are both digital and inclusive. I would like to thank all of you for your active participation and your honesty and openness.